Welcome, everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading futures markets using the Viper tools, you are absolutamente in the correct place. Tonight's topic is patiently wait for those retracement trades. And so that's what we're going to talk about. This is part one of a two-part series. Second part will be on Saturday morning at 9 a.m. Pacific. So what I'm going to do tonight is sort of lay the groundwork to get into more advanced topics on Saturday. This is recorded. If you have to leave early, I see folks coming in late. Don't worry, we're just getting started. You haven't missed anything yet. But when we leave here, we want everybody to have a solid foundation of understanding exactly what a retracement trade is, of course, because that's the way we trade the markets. First, we got to get out of our standard disclaimer screen here. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here tonight does know that you do trade at your own sole discretion. All right, with that out of the way, I see a lot of new faces in here. Welcome to you. Let's go over to screen one. I'm going to start off tonight with a YM chart. Here again, we did have an open house week, and we had a lot of people on free trial. So if I'm speaking to you, I hope you enjoyed your week. We will have the live room tomorrow. You will be invited to that, and of course, you'll be invited to the Saturday morning webinar, and then the open house and free trials will more or less be over. But let me explain what you're looking at, because some of you might be completely new to seeing what we're talking about here. So we're connected to a data feed to our broker, which is NinjaTrader. You may have a different broker. You may be through one of the funding companies like OneUp. You might have a data feed through AMP. However you get your data, these are 4 range bars. So each bar is 4 ticks in size. We moved away from time-based bars a long time ago. We trade everything we see on this chart pretty much alone. We don't take guidance from 60-minute charts or daily charts and all that sort of stuff. If you find that helpful in your trading, by all means use it. You don't really need it, to be honest with you. Everything you need to trade is right here. And so the indicators that we have created to run against this data, incoming data from the provider, is the background colors: green, intermediate, and red. The intermediate transitional backgrounds have different colors, so they're not solid green or solid red. So you see little stripes of them kind of right here. See it? Okay. Bar colors, blue, yellow, and red, obviously. We have the power meters. These are the various trends on the chart. Object Trader is a tool, a semi-automated strategy. I'm not going to really get into that too much tonight. We have entire webinars and ebooks dedicated to that. So if you're interested, by all means, log in and take a look at it. Predictors are real-time swings on the chart, printed in real time. Excuse me. Gary keeps these on in the room, and sometimes trades set up off of them, so it's helpful sometimes to have them. For the purpose of tonight, I'm just going to take them off. And then, of course, you have the bands. You have a total of 8 bands from top to bottom. In order, they are numbered 1, 2, 3, 4. Middle band, called mid band right here, thick line in the middle, 5, 6, 7, 8. The thin red line at the top of band 2 is called line 2. The mid band itself is the thickest line of the bunch. And of course, this thin green line at the top of band 6 is called line 6. And we use those in various parts of how we trade. And you'll see that tonight. Now, the one thing I want to be clear is that, and just at a very high level, markets do primarily 2 things. They are either trending, and that can be up or down, right? Trending up. We are looking primarily for long trades to get long on retracements, right? And then trending short, we would be looking to short or short sell what we call kiss and roll off resistance to get short in downtrends. Let me show you some examples. And the final thing it can do is, as you well know, markets can go sideways. And there's various types of sideways that we'll show you. You have sideways to up, which can be consolidation in an uptrend. There can be sideways to down, which is consolidation in a downtrend. And there can be times when the market is just flat going sideways. Okay? Let's start off with an uptrend. And we have one here on this chart. What's really nice about this chart is we got a lot of things that we can demonstrate right here on this chart. So let's start with the uptrend here to the left. Let me blow this up so you get a really good sense of. Now, I know, we've heard expressions like this from people who come in to trade with us, traders who come from all over the world to learn trading our system, that, sometimes it feels like you're kind of taking a drink of water through a fire hose and it's kind of blowing you away. But here's the thing. You don't have to learn all this in the next 60 minutes. Learning to trade is a process. It takes time. Normally, people have to touch something or see something at least 5 to 7 times before they really, really get it. And so think of it as a process. You're always going to be getting better at it. But you can't get better until you first understand the basic concepts. So let's start with that. When a market goes into an uptrend, the first thing you have is what's called a thrust. In this case, in the trend direction, that's going to be up. So let's look at some pushes or thrusts in the up direction. Let's look over here. Here's an up push. So when you have what's called a retracement or pullback in an uptrend, the pullback will therefore be in the opposite direction, which is pulling back downward, like such. Okay? Let's not worry about trade entries just for the next minute or two. Let's just conceptually look at what we're talking about. Okay? All right. So here's another example of a thrust. And here's another example of a retracement. Okay? Okay, I just did 2 of them. Now you're going to do one. Okay? Okay, what is this an example of? A T thrust or R retracement? Right where my arrow is. You have 5 seconds. Type in a T or an R. My arrow is going like this. Am I demonstrating to you what could be considered a thrust, a T? Or is this a retracement, R? Okay, remember we're in an uptrend. 3 seconds. T or R. Just type in the letter. Boop. 2 seconds. 1 second. Get your letter in. Cast your vote, team. Time's up. It's a thrust. Thrust is a push in the trend direction, which is up. Good. Everybody got that. Let's look at some other examples here. Let's do another pop quiz. How about over here? What is this? Is that a thrust or retracement? Over here, right here. What is this? R? You have 5 seconds. T or an R? Right over here. This right here. 3 seconds. 1 letter. All you got to do, hit the keyboard. Cast your vote. T or an R? Right here. 2 seconds. Time's almost up. Cast your vote. 1 second. Time's up. It's a retracement. Now, now that we're all experts in thrust and retracement, and so just to be clear on that last question, I was asking you about this area right here. Now that we're all experts, what is the difference between what happened here and what happened over here and here? Here. Oh, and there was 4 of them, but I'll show 2 of them. Here. How is this different than these 2, or even that one, or even that one? These 4. 1, 2, 3, 4 retracements. How are these retracements different than that circle on the right? What's different about that over there? Anybody? You got 4 circles to the left. Here, I'll make it a little easier. Let's do it. Let's make so we understand that is different. We'll make that a rectangle. Looks something like that. How is this rectangle different than these 4 circles? What happened in the 4 circles that didn't happen in the rectangle? Anybody? How is that different in the rectangle? Just in a few words. Just, you don't have to, write a dissertation on it. Well, how's it different? Is it the same? Is the rectangle the same as the square? I mean, the circle is the same as the rectangle? Or is it there's something different about it? Good. No follow through on the bounce. Didn't hold the midband. Broke the swing and kept going down. Good. Good. Excellent. So what you're hitting on here and what we're leading up to now is explaining the logic behind how and where we look to take trades. So if I was to explain this, I would do it like such. I would say that all the time you're going to hear calls in the room about midband trades. So what are we talking about a midband trade? What is a midband trade? So you can see here that by definition in an uptrend, the trade entry would be once the bars enter into this band, they can go into this band, and they can actually sit on the midband itself. So we actually have several examples of that on this uptrend right now. Here's an example of where bars are sitting directly on the midband. So that's this is an uptrend long midband trade. Here we get the same thing. The bars come down and sit right on the midband. So there's a long midband trade with the bars right on it. Yes? Now here's an example where it didn't quite get to the midband, but you enter into this area right here. So therefore it qualifies as a midband trade, even though it didn't actually physically touch it. So midband trade, let's start over here to the left. Midband trade number 1. Midband trade number 2. Midband trade number 3. Here, and of course you can see midband trade number 4 is right here. So the simplest of definitions are midband trades taken at or around the midband, as I have with those rectangles right there like that. That's the definition of a midband trade. Now, in order to have a retracement midband trade, you need to have a trend. You need to have a trend. This midband trade, many times, if you are in a very tight range, if you're very range bound and it's a tight range, maybe it's only like 10, 12, 15, 20 ticks, and the midband's in the middle, then you would, in those cases, sometimes not take midband trades because there's not enough meat on the bone to the top of support and resistance. Now, you can see clearly here that we did not get a midband trade because even if you'd boxed it in using Object Trader, like such, the bars just plowed right through it. There was no bounce here. You never got a long trade. You could have been looking for it when it came here, but you would have never been filled to the upside, right? So you were correct if you answered this question over here that this was a retracement, because by definition, the pullback in the opposite direction is the retracement. So here was the thrust, and here was the retracement. So the correct answer was R, retracement. Now the difference is that these 4 got midband trades, where this one didn't. Does everybody see that? Now I want to say one other thing in an uptrend that you might hear in the live room. And in the beginning, as you're learning, I think if you want to experiment with these other trade types, you can certainly do it. But I would strongly urge you to do it in sim until you master the midband. Once you get the midband down and you clearly see trends and you're starting to become profitable with a high degree of win rate, then you can expand your trading repertoire, your toolbox, if you will, to include these other trades. In the room, you might hear something like, there is a minimum criteria trade setting up. Now, in an uptrend, that means that the bars come into here. Below, they have to close below the stealth line and below line 6. This is called a minimum criteria trade. In the beginning, as you're learning, we really don't recommend that you try to trade that first. Stick with the mid-band. You can make a lot of money on it coming out of the gate and add that later. Now, you also might hear something in the room like, wow, that's a deep retracement. Or you might hear something to the effect of a phantom trade. A phantom trade or a deep retracement trade is a trade that comes below the bottom edge of where a mid-band trade would be here. When you get down into this area right here in an uptrend, and the bars might actually turn red, and they might bounce off of line 2. Now, if you take this trade and you learn it, your first goal is to scalp it back to the mid-band. Because many times this deep retracement can actually turn out to be a trend change. Okay? Just be aware of that. Out of all the trades, as you learn and grow with your trading career in futures, I would, in order, learn the mid-band first, master it. Next, I would look to add a little bit of dabbling into minimum criterias, especially in power for uptrends where you're not getting deep retracements. And last, I would look to learn this, very last in your toolbox. This takes a little mastering to do, because many times when you see these red bars down here, you're thinking trend change, and you might start looking at shorts. So that's going to take a while. I'd make that third. Now, okay, so any questions in an uptrend, how we observe the thrusts, how we identify the retracements, and where we look to enter trades on or around the midband. Any questions on that? Because I'm going to move on to downtrends. So the other characteristics before we move on, and it's pretty obvious on the chart, is that when you have a continuous uptrend that's in place for sometimes a half an hour, or 2 hours, it can be a whole day, that the background will be a solid green. As you can clearly see here, the bars are predominantly blue, especially in the thrusting moves, right? In the retracements, you can get yellow bars. That's not unusual. That's the algorithm just painting them. And a lot of times that will occur around the midband. The bars will turn yellow like that. Don't let that concern you. Don't think that's a trend change. It's just retracement on the midband in an uptrend. And so and theoretically, you should continue to get a series of what's called higher highs and higher lows. So here you have a high, a low, higher high, slightly higher low, higher high, etc., all the way. See how it's working its way up? That's the other telltale sign of an uptrend. Now, you can clearly see on this chart here that around 8:12 or so this morning, we got the apex of the thrust in the uptrend right here, signified by that dot. We clearly see we did not get another long here because it did not bounce. And we make note of the fact that we did not get a deep retracement trade because it didn't bounce there either, right? So here's a midband trade, and here is a deep retracement trade, and that never bounced either. So now you're breaking through, and not only are you thrusting through support, but now the background has turned red. The midband and all the bands are stair-stepping down. You have a red background, and the bars are predominantly red. You are now said to be in a downtrend. So think of a mirror image to an uptrend. In a downtrend, the thrust direction is a push downward, right? So by definition, then, a retracement would be what direction? 5 seconds. In a downtrend, the thrust is a push downward, like such. So in a downtrend, the retracement is what direction? U for up, D for down. 4 seconds. Type in a letter. Boop. 3 seconds. U for up, D for down. What direction is the retracement in a downtrend? U for up, D for down. 2 seconds. Just one letter. What direction is the retracement in a downward trending market? U for up, D for down. 1 second left. Time's up. Up. Good. Because we just showed that in a downtrend, the thrusting part of the move, of the trend, is down. So therefore, the retracement has to be up. Right. So everybody said up. So you were right. Good. Now, the location of the midband trade on the downtrend is in the exact same spot as the long in the uptrend in the fact that it's on the band directly below the midband, bars sitting directly on the midband itself, and bars that protrude up into the band above the midband right here. So you can see that the definition of the trade type is exactly the same in terms of location, right? But what's different about a downtrend? In a downtrend, are we buying the market or selling it? B for buy, S for sell. In a downtrending market, are we buying it or selling it? Okay, the bars are red. Bands and all the mid-bands are stair-stepping down. Lower lows, lower highs. Are you selling? Are you buying? 4 seconds. S for sell, B for buy. Off the retracement. What are you doing with it? 3 seconds. S for sell, B for buy. 2 seconds. There's a reason that I do these little exercises punctuated in the learning, is because what I've found over the years of training literally thousands of traders is that when you participate in the learning, that what you see, it stays in your mind when you see it again on a chart, like tomorrow morning, for instance, or next week. Time's almost up. In a downtrend, are you selling or buying the market? 1 second left. S for sell, B for buy. Time's up. Sell. Right. So just to go back, it's the mirror image of the uptrend. So over here, if you recall, on all these retracements, we were buying support, which equals long trades in the uptrend. Let's make sure that we're clear about that. For all the retracements in the uptrend, this is what we're doing, right? That's our mode of entry for trading in uptrends, is buying support on retracements. Okay, we all saw that. We saw many examples of it right here. Okay. Now the opposite is true in a downtrend. The retracement, the thrust is down and the retracement is up. And so when we get into this midband area, we are doing the opposite. We are selling it. Let's make note of that over here. So in the downtrend, selling resistance, or which equals shorting, yes. Once again on retracements. Okay, another pop quiz. I'm going to do 2 of them back to back. Both of them are going to have 5 seconds in length. Should you sell this market on YM in this circle that I'm going to draw right now here, yes or no? 5 seconds. Is this a sell signal right here? 4 seconds. A yes or a no. That's it. Why? Yes. Yes, you should sell it. And no, you should not sell that circle where my arrow is pointing. 4 seconds. A Y or an N. Yes, you do. No, you don't. 3 seconds. Just the letter. Two seconds. Yes or no? Is that circle where you should be selling this market? Yes or no? Right here. 2 seconds. Yes or no? Y or an N? 1 second. Cast your vote, team. Right here. Sell, yes or no? Time's up. No. Now, I'm going to say this, but there is a sometimes very rare exceptions to it, which I'm not going to get into the details of. I think just for the sake of simplicity and something as you're learning to just bank on, is you never, ever, ever sell or buy retracements. Or, thrusts. In fact, I'm going to put that on here. That's how important this is. Never, and I'm not going to do never, ever, ever. You get the idea. Buy or sell thrust moves in a trend. Now, why is that? Why do we have that rule? Why does that rule exist? Where'd that come from? I want to buy it down here. Hey, look, Charles, look, this tank to the moon. It's going down another 100 ticks, and I'm going to miss it. Fear of missing out, FOMO. I'm getting in. I don't care what you say. This is the place to get in. Well, I don't know what you're talking about, you and your silly rules. Makes no sense to me. I'm going to trade my system because I'm a winner. What are we talking about? Why don't we want to do that? Well, think about it for a second. If you fire a market order to get in short, down here somewhere, and you're short here, and the market starts to move against you, where are you going to put your protective initial stops? Let's suppose you got short here. Let's use a round number. Let's use the 65. 65, and here's how this works. Here's the logic. I understand. Look, I've been trading 25 years. I've seen it all. Market starts dropping, taking out support, taking out bar. Background turns red. Bars are red. Tanking. By the time it gets down here, guess what? You're convinced that this thing is dropping and you better get in or you're going to miss it, right? Hey, look, I know. I've been there. So you pull the trigger and you're filled at, 65 short. No, your P&L starts to get negative real quick. You're upside down. This is $5 a tick. So each tick of movement is $5. You're down $5, $10, $10, $20. You're down $15, $20, $25. You come all the way up here, 15 ticks above where you got in. On one contract, you're down $75. Maybe you had a 15 tick protective stop on your short. And sure enough as heck, the wick of this candle takes you out. You're down $75. Maybe you had a 2-lot on. You're down $1.50. Only to find out that right exactly as you stop out, the other traders who are following the system are boxing it in here and actually taking the short trade right in here because it's a valid, bona fide mid-band short trade. So this is just a small, quick example of why you don't ever sell thrust and retracements, because you're going to get left more times than not holding the bag and stopping out, only to find out that the market rolls over and moves in your favor. And now you're chasing it and you're digging out of a hole. How many of you have fallen into that trap before? Anybody? Show of hands. No shame. I won't say your name. Don't worry about it. I know. Nothing to hide in here. I told you I used to do it all the time. That's how I learned how not to do it. I lost a lot of money doing it. I did it for years. I can't tell you how much money I, for lack of a term, peed away doing that. Yeah, if you're stuck in that situation, you gotta work your way out of it ASAP, because that's the surest way to drain a trading account is by doing that over and over and over and getting stopped out, especially at the open, and you're digging out of a hole every morning. You got to avoid that. Just think retracements. And the key word here for tonight is patience. I think you notice, if you know yourself, right? Traders tend to be impatient. They want to get in. You want to do all this learning. You're up early in the morning. You got your coffee. Your charts are all prepped. You're ready to go. The market's moving. Well, you want to make money, so you want to pull the trigger. You want to get in. I understand that. I fight that every morning too. Every trader does. But you have to patiently wait for the right spots. You're like a little sniper sitting there for the perfect spot. And when you get it, you pull the trigger. And it's not doing it in the thrusting part of the move. Now, in the live room, we help you see that. Okay, we will tell you, okay, now it's thrusting, now it's pulling back. An example here might be, the market's up here trading at 296, and we're looking at it and we say, okay, the mid-band's sitting down here around 75. If YM pulls back anywhere around 75 at that mid-band and bounces, that's the caveat, right? and bounces. If it comes to 75, 76, 70 area and bounces, I'm going to get long. That's what we're talking about. If you ever hear that in the room, Gary says it on oil, I say it on ES, whatever chart it is, that's what we're talking about. What that implicitly means is that we have made note of the fact that the trend is up and that the thrust is occurring. And we're telling you ahead of time where I'm looking to buy it. And that's going to be usually right around here, around that midband, every time. Right? Now, an example over here, we all know that it didn't bounce. And so our caveat of if it came to, let's say, at the time of this apex of that push, you say, okay, if it gets down around the mid-round, around 301 area and bounces, I will look to get long. Well, we can see, obviously, that trade never happened. Right? On the opposite side of things, when we're looking at the short trades, that's where the term kiss and roll will come into play. What we're talking about, kiss and roll, meaning we want it to come up at or near around the midband at resistance at 283, 84, 82-ish, kiss at or around the midband, and then roll over. The rollover then begins the rethrusting in the trend direction, which is down. Now, I have to say something here that bears more than just an honorable mention. The two things that are going to really help you do well, aside from learning how these trade setups, that's obvious, is this. I'm going to give you a couple of really important tips that I hope everybody really, sort of tucks into your trading memory bank and takes it to the bank. Number one. For those of you who've been with us a long time and you heard me say this 1,000 times, please bear with me. Number one, find an instrument to trade and then master it. Now, it doesn't really matter to me which one you pick. It could be YM, it could be NASDAQ, it could be ES, gold, it could be crude oil. We have traders I've mentioned before all over the world that trade currency futures in the European session. They never come to the live room. They license our software and have for 10 years. They trade. They've come to 100 webinars and know how to trade it. So they don't ever come to the live room. They trade the Asian session over there. They'll trade 6E, 6A, 6B, dollar index. So that's what you want to get to. We teach you to be independent so you can pull the trigger yourself. But each instrument has a different personality. Some have deep retracements that go way beyond support levels, like YM does sometimes and NASDAQ does every morning. I like ES. I trade ES every morning. I have for years. I know ES like the back of my hand. I can look at ES and with a high degree of certainty pretty much predict what's going to happen next. Not all the time, and I use my correlations. I'm not going to get into that too much tonight. That's a more advanced topic I'm going to save for Saturday. The correlations. You can't build on correlations until you understand the basics. So tonight we're covering the basics, right? It could be crude oil, it could be gold, it could be anything. Find one that you like the movement of and then master it. 2, master, I've said this before, just to put it right in writing on the chart, the mid-band trade. Those two things. This is extremely important. These two things. If you did these two things, if you just strived in the beginning of your, or even middle or mid part of wherever you're at in your development, just did that. Oh, I'm sorry. I'm going to go ahead and put a number 3. This is the other one I was going to say. So there is 3. Limit your trading in the morning. And this is really important. This is number 3, but it's right out. I'd actually go like 1A, 1B, 1C. They're all kind of equally number 1 important. To only 1 or 2 trades a day. Charles, you know what? I don't know what you're talking about. I can't make any money. What are you talking about? One trade. I can't make a living on $100. I want to make the big bucks. You know, you and Gary make thousands every morning. Why can't I start doing that? One or two trades. You're out of your mind. Well, let me ask you a question then, if you're in that camp. Because I would put $100 on this table right now and venture to say that the vast majority of you in here tonight overtrade. Show of hands, overtraders. If you take more than one or two trades a day, you're overtrading. Overtraders? Anybody? Hey, look, I know. I was the master of overtrading. I used to revenge trade. Anybody doing that? First thing I would do is I'd come in and I'd pull the trigger and I'd lose money every morning. My wife thought I was insane. Went up to the trading floor in San Francisco, pull the trigger, drive up over that Bay Bridge every morning, crack at dawn, in the dark, only to get there at 6:30 market opens, to find something to trade, pull the trigger, bam, I'm in the hole right out of the gate. 100, 200, 300, 400, $500 in the hole every morning. Every morning I did it like an insane person. Until I stopped pulling the trigger on these thrusts. Stop trading the wrong instrument that I didn't understand, and the personality, jumping from here to there to trade this. Next day I'm trading that. Next day I've got all manner of charts up that I'm trying to trade. 20 trades? You're taking 20 trades? Yeah, now you're down. You're angry. You're upset. You're in the hole. You're digging out of a hole. You hate it. You're upset. And then you're not thinking clearly. She did not divorce me. No, she did not divorce me. We're together 25 years, so I'm very lucky to be with her. But yeah, these are all things I know we can talk about it, and you can think about it and believe in it, but you got to act. You got to do it. Find that instrument you really like. Experiment with 2 or 3 or 4 of them, maybe 6 of them. And then maybe you start off with 4 or 5. Narrow it down to 3. Narrow it down to 2. Get it down to that one that you have on your main screen, and then focus on that. And then you know what? Some of those other charts, if you want to watch correlations, you don't trade them. I've said this before. I do not trade NASDAQ. A lot of people are like, oh, Charles, it sounds like you trade NASDAQ every morning. No, I don't. It's too wild. It's too whippy. I've traded it before and lost money doing it. If you lose money consistently on an instrument, you should move on and find something else that you're profitable on. But do I look to NASDAQ as a potential market direction leader? Do I tuck it in the corner of my 4 screen and look at it? Sure, of course, every morning. You've seen the screenshots, most of you, right? In your emails that I send out, I take those screenshots and I show you exactly how I trade the market. Do I take YM trades? Occasionally. Sometimes I'll trade YM. Here's a good example here. Going into 8 o'clock in the morning, where YM is, and this is not a fancy term, is behaving itself. See how it's behaving itself? It's respecting the midband with very nice, orderly pullbacks and bounces. These are trades you can take, all right? If an algorithm is running against YM, and it happens, it can go spazzing, flying all over the place. Deep retracements, big spikes up, huge pullbacks down, way through the midband, and you can't figure out where the heck to get in it. Then you don't trade it. In order, and I'll just say this, in order of spikiness, the equity markets look like this. The most spiky is NQ. The next level down in spikiness and whippiness would be YM. Next level would be Russell. We used to have that in the room until it got a little spiky, but it's a little bit less than the other two. And the slow poke in the park is ES. That's from rating it from most whippy and spiky to the least. So pick your spot on the level there. The other thing I want to say about the equities real quick, and then I'm going to move on, is that, and most of you know the correlations, is that, oops, wrong one. Stand by. Let's use an example here, that the trend is up and you're taking longs on the equity. So pop quiz, make sure you're still awake. Pop quiz, pop quiz. Now, underneath of this equity volatility sentence, if you will, I'm going to put gold. If you're getting long on equities, what direction is gold going and what kind of trades do you take? So you have an uptrend on the equity markets. NASDAQ's leading it up. The others are following. YM's following it. Russell's following it. ES is lagging about a minute or two, but it's following it. What should gold be doing? What's the relationship between the equity markets if the correlations are intact? And this is the last I'll talk about these till Saturday morning, and then I'll get into great detail on how to watch that. But that's too advanced for tonight. So if the equities are going up, is gold going down or up? What's the correlation? Are they correlated the same? They always move the same direction, or do they move the mirror image in the opposite direction? What am I going to type in here? I got to type something in here. I'll give you 5 seconds. Gold's doing what? We need to fill in that blank. Help me out. What's a goldy gold doing? 3 more seconds. Just up or down. Is it going up or down? If the equities are going up, what direction is goldy gold going? If the correlations work. 1 second. U or D? All right, time's up. Down. So you are shorting it. Now, as I mentioned before, there are times where these correlations don't work. It's pretty rare. They go out of correlation for maybe, sometimes 5, 10, 15 minutes. It can be as much as an hour. And then normally they come back in, but they can go out of correlation. And here's what I'm saying is that when they're correlated and moving like today for the past several months and weeks, there was one day, I think last week, that they weren't correlated in the morning. Like equities were going up and gold was going up, but that's extremely rare. But what I'm saying, just don't blindly, if you're watching all these markets go up, don't blindly short gold and just insist you shall go down. You look for entry points and you be logical about how you approach it, right? You just don't say, oh, well, I'm just going to short gold. Next thing you know, it's in your face, 50 ticks. So be careful as you're watching this, okay? All right, now before we run out of time, I do need to speak to the other market conditions, which involves sideways movement. I'm going to speak to that, and then we're going to end with some pop quizzes. By the way, I'm going to go clean this chart off. I want to clean this chart off. Are there any final questions? Did I miss any questions? Because I'm going to erase everything I've written on this chart. Let me go back here. I see there was some questions coming in. Some people saying, yeah, Gene, that In-N-Out burger. One of these days I'll send those to you. I'll have to find out one close to where you live and have them Uber it over to you. Uber Eats or whatever. Bob's funny. God, I want some patience. And I want it right now. That's pretty funny. Trafita, I don't remember. I think I did a recap video this morning. We did a webinar for the open house folks, and there was a screenshot that showed that. I don't know if you saw it. It should have been in your email. I had a detailed screenshot of all those the markets. David, I'm gonna get into the details of the trade entries themselves, but I need to talk about sideways markets, and then we'll wrap up with look. In fact, I'm gonna do a pop quiz right now. All right, cleaning off the chart. I don't see any more questions. Chart being erased right now. There we go. Gone. Boom. Just like that. All right, now I'm going to show you, we're going to recreate 8:15 a.m. Pacific time on YM on the 4-range chart, and I'm going to start with it like this. Now, when you see a long trade set up, I'm going to advance it bar by bar. You type in the letter L. Many of you have done this exercise. I'm going to do a couple exercises, and then we'll look at how you can tell that a market's sideways and how to trade it, okay? All right, here we go, 8:15. So when you see the trade entry long, you type in the letter L. Here we go. Here, let me blow the bars up real big. Don't type in L now. This is the thrust. I'm going to help you. I'm going to start off by helping you. And the reason we know it's long, I'm helping you there too, is because you see obviously that we've broken the swing levels to the upside. The background is green. The bars are predominantly blue. The mid-band and all the bands are stair-stepping up, and we're looking for higher lows and higher highs. So by definition, you are looking for a long, yes? Good. All right. Okay, here's 816. Here we go. 816, 816, 817, 817. Looking for longs, looking for long entries. We type in the letter L when we think we see it. We started it when the market was here at 8:15, and now 3 minutes later we're at 8:18. Looking for longs, typing in the letter L when we see it. Okay, let's go back and do that again. 8:15, 8:15, thrust, 299, pulling back. Pulling back. Hold on, chart's frozen. Stand by 1 second, please. 817, 818, 818, still 818. Sitting on there for about a minute, minute and a half. Sitting right on. Sitting right there. Okay. There we go. 819. 821. Okay, did everybody see it? How many of you typed in the letter L when the bars came down and were sitting right here like that? Or how many of you now see that that was the entry at 818? Was that a mid-band legitimate long entry, yes or no? Or what say you, team? What do you say? What do you say about those yellow bars? All right, you want to do another one? Let's do another one real quick, and then we'll move on. Here we go. Okay, I'm going to start advancing from where we left off on the last long entry. So just to be clear, I'll leave this on the chart. If you said L anywhere around this 818, 819 area right in here, that was correct. L was right there. Okay? All right, here we go. Continuing on. 822, 822, 823. Remember, you're going to type in an L when you see a long trade entry. You type in the letter L. 823, 824, 825. Coming up on 826, 826, 827. Sitting here for almost 2 minutes. Let's get the bars super big so you see them real good. Blow this up a little bit more there. Remember, when you see a long trade entry set up, you type in the letter L. L for long. Okay, 825. Coming up on 826. 826. Coming up on 827. Looking for longs. Where's the entry? Where's the long entry? L. L is the letter you put in. 825. Let's do that again. 826. 827. 828. 829. 830. How many of you got it? How many of you see it now? Did you get it? Where'd you get it? Did you get it? Did you type in an L when it was sitting right in here for 2 minutes? Is that a long trade? Is that sitting right above the mid-band in an uptrend? What do you think? Over here, you went a little bit below it. Some bars are touching it and sitting on it, and some bars are just a little bit below it. And here, the wick, this wicks it a little bit, but it's sitting in a band just above it, right? Isn't that long? Yeah, you might have gotten in early on these two candles, Bill. I see that, but in all likelihood, with a 15 tick stop, you know, if you're filled maybe, you know, on one of these bars right here, We show the box, and I just want to say this real quick. We show the box simply because we have the Object Trader tool where you could engulf the candles with a region box or a rectangle. And the way it works is that when it closes, let's use this example box right here. When it closes above it, you're filled long on a market order. Okay? Filled long on a market order. In this example over here to the left, depending on when exactly where you drew the box, you'd be filled on a market order long on the close of that bar right there. Now, the beauty of Object Trader is that it puts all the targets. It'll put your scalp targets. It'll engage a trail for your runners. It'll place your initial 15 tick stop or 10 or 12 or whatever down here. You don't have to leave it there. You can move it. You can move it up to there. If you're trading a 2-lot, we say that you pull off an 8 tick or 10 tick scalp, like such. OCO, one cancels the other. Your initial stops that were 2, you only have 1 long. You take this back up to 3 ticks behind your entry, and then you engage your trail on the runner. The runner proceeds up in your favor, like such, and the Object Trader will trail for you. Up, and then probably that bar took you out right there. Now, can you do this manually? Of course. Could you put a buy limit order down here and you close when that came up through here, you were long? Yes, of course. Could you hit a market order while it's right here? Absolutely. So there's many ways to get in. There's many ways to get in. And so here again, as you're experimenting with your various instruments, we talked about finding the instrument you want to trade, right? That you also experiment with different ways to get in. You can play around with Object Trader and see if you can get the hang of it, drawing the boxes and all that sort of stuff, getting it all positioned correctly. You can put limit orders here when you see a setup. You can even pull the trigger on some market orders. But keep in mind that the execution of the trade, if you're going to go manual, then all the things that I told you about the 2-lot initial stop placement, the placement of your targets, the runner targets, the scalp targets, the moving of the trail stop, all that has to be done manually. All that has to be done manually. You have to do that all yourself. It's not impossible. A lot of traders do it. You can get in that market order, limit order, trail stop, initial stop, all the rest of it you're going to do manually, okay? Whereas at OT, if you manage that, if you master that tool, it's semi-audited strategy. It will do it all for you. You don't have to do all that yourself, okay? Now, I'm going to show you a consolidation area and ask you a question. Are you ready? Stand by. I have to clean the chart off one more time. Clean the chart off one more time. Any questions so far? Is everybody getting it? Are you getting what we're talking about? Is it clear? Is it clear what we're doing? Yes? Okay, good. Good. All right, I will proceed. If you've grasped everything I've shown so far, I will proceed. It's clear to me what I need to do. Now I just have to execute it. Good, Radon. Sandra says, this is a good webinar. It should help me a lot with my patients. Good. Just think retracement. That's all you got to do. You know, just, you know, on the surface, you know, you may say, you know, Charles, this is some pretty basic stuff. Okay, this is some pretty basic stuff. You know, but what makes it complicated is when you are looking at real lifetime, you know, you can't armchair quarterback real-time data flying at you every minute after minute, right? You know, you're looking at these bars, I'm trying to recreate real-time and showing you some trades, but it's not live. So that's why you need the basics. You got to have the basic fundamental understanding of what you're doing and where you're getting in so that when the bars come flying at you, you know what to do. Now, I'm going to ask you a quick question, and we're going to get ready to wrap here pretty soon. In this consolidation area right here, is your primary mode of entry long from support, L for long, so you're buying support here, or is your primary mode of entry S short, 5 seconds on the clock? Or do you believe in this area here that you can actually trade both directions. You're going to be buying support, and that would be a B. Or no, yeah, let's do it this way in your answer as you ponder this area right here. So just to be clear, so I'm going to engulf this consolidation area as referring to this. So in the case of you're taking longs only, your answer would be L. As your primary mode of entry, you're only taking longs in this area right here, L. If you believe that in this area your primary mode of entry should only be shorting the top of the range, your answer would be S for short only. Short only is S up here. And finally, if you believe that in this range you should be trading both sides of the market, long and short, then your answer would be the letter B for both sides of the market. 4 seconds left. Cast your vote. L for longs only, buying support only, S for short only at the top of the range, S short only. 2 seconds left. B, you would trade both sides. You'd be buying support, which clearly you can see with the yellow bars is right at or around touching on the midband. And then you would go ahead and flip it short at the top of the range. So you would, in that case, type the letter B for both on how you approach this range. I'm going to give you 2 more seconds. Just type in a letter, L, long only, S, short only, B, both sides. 1 second left. What say you, team? Last question, and then we're going to wrap. One second. Time's up. The correct answer is long. We can see clearly here that, let me explain why. Here we can see that we have, first of all, we see the fact that we have a green background. We have higher highs and higher lows. We have predominantly blue bars. The mid-band and all the bands are stair-stepping up, so it's very clear that we are in an uptrend. So when a market goes sideways in an uptrend, you remember earlier, about an hour ago, I said that if you can have consolidation in a trend, and you would refer to that as sideways to up. So for instance, in a live room, maybe a market might look like this. Maybe it's the gold market, maybe it's crude, whatever. And it has a thrust, you got the green background, and it looks like this. We would call that sideways to up. So every time that it came down and bounced off of the mid-band, you have a long trade. Here's a long trade right here. Right? Here's a long trade right here. And here's a long trade right here. Right? 1, 2, well, you could have taken that one. I don't know if you would have taken this one or not. Because you were anticipating, and frankly, this market could go either way. It could break up and you can get trend continuation through here, or it's quite possible that it could go down this way. Our thinking is it might break up, and therefore we're not shorting it because we don't want to get stuck in a short in a powerful uptrend and it rips up through it and we get stopped out. Everybody see that? Now, some of you said that there is another option where I could decide not to trade it, where I would stay out, and you are correct. Now, look, you know, how many of you love or hate ranges? What kind of relationship do we have here tonight with ranges? You like ranges? You love them? You trade them? You make a ton of money? You scalp in there? You're in, you're out, you're in, you're out. 5, 10, 15, 20 ticks over and over and over, load it up. I love me some ranges. I make a lot of money trading ranges. That with you? Or I can't stand ranges. I hate ranges. Every time I trade a range, I get creamed. You know, I've lost so much money in ranges, I'm never trading a range again. Is that you? Enemy. I'm seeing words like enemy. No, hate it. So then you would have the fourth option. So what I'm going to say, here's how I'd like to approach it, and then we're going to wrap up, is ranges come along very frequently in trading. They happen a lot. And, you know, if you don't have the ability to trade them in your trading toolbox, you're going to wind up missing some pretty good moves sometimes and some good trading, money-making opportunity. So I would suggest before you completely just throw it out the window and dismiss trading ranges, go into sim for a few days when you see a range and, practice doing it. Yeah, you got to scalp. So in this case, that's the opposite of what we showed on our long trade down here. Remember, this was our long trade that I erased, right? I spoke through the mechanics of the trade itself. We have the scalp, we have the runner, we have the initial stops, we have move it, and we have the trail, right? Now that approach does not apply to a range. In a range, you have your entry where you fade the bottom. So you don't put your buy entry down here and not get in. You have to go 3 to 4 to 5 ticks above where support is and either put a box on it or put a buy order in here. Now, if you're going to get out, do you put your sell order right up here at the apex of these swings? Is that where your sell goes? To get out of your long? Or are you going to want to fade that top a little bit and put your sell order like right in here? Yeah, Captain. You fade it. So the trade actually looks like this. That's where I think a lot of traders get into trouble. I see this all the time. You're wanting to get the top of that range, and you're wanting to get in at the very bottom, right? You're wanting to do that. No. That's not how you trade a range. You don't do that. Don't do that. You're getting in here, and you're getting out here. You got to come 3, 4, 5 ticks at least off the top and the bottom. So the actual trade itself looks like this. 1, 2, possibly a 3, depending on how and where you choose to trade it, but that would be a 3. You maybe got filled here. It's hard to say. Maybe you did. You wouldn't have been stopped out because your initial stop's down here. So you get this would be one continuous trade, or with this. I'm lumping these two together because this one never hit the target, but your stops are down here. Your 15 tick stops are down here. 15 ticks is actually down here. You have a tighter stop, but probably closer to 10 or 12. You can identify a range ahead of time. Now, the best one to do that on is by far ES. ES is the king or queen, if you will, of range-bound trading, mainly because of the fact that when it gets into a range like you see here, it respects support and it respects resistance, and it's really clear and very quickly you can see it. Here's how you can tell. You come up, you put in a swing, you need to connect 3 points. Comes down, you get the higher level of support, so that's a legitimate long trade, irrespective of the fact that it's in a range. This is still a long mid-band trade, correct? Yes? Isn't this a long mid-band trade, notwithstanding whether it's a range or not at this point? Correct? Yes, of course it is. Right. Yeah. Okay. So then the question, when you're sitting here and you're looking at a market that looks like this, is this level up here going to hold as resistance? Or, and you don't know at 8:25 when this happened, whether it's going to blast through it and do this. If it does that, we all know it's pretty clearly trend continuation up, right? Because that's another thrust off the mid-band support level, right? However, if it kisses this and holds it, that is point number 3 to, at that point, know that you are range bound. Now, Gary is very good at doing this, and I strongly urge you to watch his webinar from last Monday. I think it was called Art 101, Drawing on Your Charts. Drawing on your charts is extremely important. If you can learn to put support and resistance lines to make your trade entry decisions, it is money. I strongly urge you to go back. In fact, it's on the web. Let me show you where it's at. Art 101, Drawing on Your Charts. Let me show you where it is. Please, if you get an extra hour, watch it. It's really good. Here, this one right here. This one right here. Go to the web. It's on the public website. And for you members, it's back in the login area right here. Art 101, Draw on Your Charts. Support and resistance lines. It will make you money. I'm telling you, it's worth the hour. This is a pretty good one too. Follow leader. I think that was my Thursday. This was either last Thursday or Friday. Here was one talking about trading range. I think that was mine on the 24th. All these first 6 are really good. You can peel away 4, 5, 6 hours and watch those. You're going to learn a lot in a short span of time. Anyway, back to this range and answering Radon's question of how do you know when you're in a range, and I'm showing you how to do it. So we have an established swing from here on that last thrust up from our long trade entry here, right? We took the mid-band trade, not knowing at the time it occurred that was a legitimate trade in an uptrend anyway. So then we watch the market, we watch the market, we watch the market, and it comes up, and what does it do? What does it do right here? What does it do right there? Hits its head and gets rejected. That's point number 3. Point number 1, touch point number 2, touch point number 3. So what you would do at this point, you already got your scalp off, so you would have scalped that trade, and then if you engaged a runner, just like we teach, you would have been stopped out somewhere in here. Now you put the line here, and you put a line here, and you put a line here, and now you know you're in a range. So yeah, does it take a couple of 3, 4 minutes, depending on how fast the market moves, to get the 3 touch points? Yeah. Some are faster than others. The last thing I want to say about trading ranges is that takes, remember I said number 1 was find an instrument to trade? If you're going to be a range-bound trader, I'd strongly urge you to look at ES. The other markets are going to be a lot tougher. Russell, YM, and NASDAQ are notorious for getting big whippy ranges and very difficult to trade in ranges. Gene says, great class. Good to see you in here. I've been playing around in the market and I made $310 trading tonight. Excellent. Good for you, Gene. That's about 31 double cheeseburgers from the In-N-Out. All right, I'm going to go ahead and stop the recorder. I know I went way over here. Sorry about that. Sometimes I think it's better to finish up the explanation of what we're talking about before just cutting it off.